Welcome everybody to today's very special session, How to Profit from Gold and Silver, presented by myself, Phil Carr, at the Gold and Silver Club. So during the session today, we will be covering how to profit from gold and silver, the biggest trading opportunities right now, how to use fixed odds trading for maximum profits, live market analysis, and we'll be identifying high probability trade setups on the commodities. And of course, we'll be answering any questions you may have during the whole session as well. So any questions you've got, do make sure you just put those in the chat function. The commodities that we'll be looking at alongside gold and silver today will be also crude oil, palladium, and platinum, the commodities which are available to trade on the binary.com platform. Okay, so let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities. So as internationally respected experts, our analysis, our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth, generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is at www.thegoldandsilverclub.com. Okay, so have a look at the gold price at the moment. So for those of you who follow gold, gold broke down significantly today. Gold's currently sitting at $1,228 per ounce, sitting right at its daily lows. It's broken down about 200 points today. So we're looking at gold. We'll have a look at that on the charts very shortly. We're looking at some trade opportunities, certainly, which are starting to develop here on gold as we head towards the close. And we've also got some trade opportunities lining up on some of the other metals too. So why gold and silver, and why now? Well, in case you haven't been following our weekly commodities corners, just so that you're aware of where the price is in context to previous rallies in previous years, what we've seen so far in 2016, precious metals, they posted their biggest quarterly gain since 2010. Okay, so it's the best performance in 6 years. Over the first quarter of the year, they outperformed returns on equities, on bonds, and all major currencies. So another sign that precious metals, they're entering out of this bear market they've been in over the last 4 or 5 years and entering now into a bull market. Now, we are overdue a correction. We've seen a continued rally now on the precious metals, which have been going on for 5 months, which is unprecedented without any significant correction. So we're absolutely overdue a sell-off at the moment on the metals, which is what we're starting to get. But let me just put you through the overall context of data that we've got on gold and silver at the moment on a historical perspective. Okay, so traditionally what you tend to see in any commodities, but in particular as it relates to, in this scenario, gold and silver, particularly the pullbacks that we've seen over really the last 5 or 6 years, which has been the second most extreme bear market now on record for gold. What you often see is the bigger the bear, the bigger the bull. So where you've been a very significant downward trend, where you've been in, where you've seen a market which has corrected significantly, what you'll tend to find is when it does finally bottom, it will come roaring back. So if there's been a very significant bear market, it's been the same with soybeans recently as well. We've been in a very significant bear market on soybeans now for about 4 or 5 years, and that's been a runaway trade so far this year. We've seen huge gains on soybeans over the first quarter of this year. It's also been among the top 3 performing commodities of 2016, up 23% year to date. So the bigger the bear, the bigger the bull, okay, which you get subsequently roaring back. And we've certainly seen that so far over the first 4 to 5 months of 2016. We've really seen the start of a new cycle, so a new long-term cycle developing, where we've seen a switch of capital out of equities and forex and then moving into commodities like the precious metals, signaling the start of a new long-term cycle. So back in the 1980s, when the cycle last switched, we saw commodities returning a staggering 300% return over a 10-year stretch. So we saw huge inflows as measured by the Goldman Sachs Commodity Index. The current levels of bullish sentiment, trade volumes, record open interest indicate we are potentially again on the cusp of a similar switch right now that could again, if we get back into a bull market on commodities, particularly gold and silver, could last for the next 5 to 10 years. And we'll have a look at that and some of the indicators that we look at for that. This is the last time that the cycle switched, okay, when commodities returned 300% over a 10-year period as measured by the Goldman Sachs Commodity Index. And we've been in that period this year where we're transitioning from a bear market to a bull market. We've seen significant inflows into gold, into silver, into the grains here as well. There's been a lot of upside so far in 2016. Now, what I'll be talking you through today is obviously how you can learn to trade gold and silver better, some indicators which will assist you further in identifying trade setups. Okay, so I'll talk you through how to identify profitable trading opportunities. So when a market shifts from a bear market to a bull market, they don't move in a straight line, which I'm sure you're aware of. They will correct. We need, in fact, on gold and silver right now, we do need a healthy correction. We need a pullback. We need to shake out the speculative trades here in order for the market to break out higher, in order for the institutions, the hedge funds, the money managers to enter back into this market and push this trade up to break out from the 2016 highs. So at the moment, we've seen gold, for example, really struggle with 1,300 US dollars per ounce. It's not been able to actually break and follow through from that level. We've seen a very brief touch of that level, but we've not had enough of a catalyst to break us out from that level and then have a sustained rally above 1,300. But still, we've seen over a 20% gain on gold at its peak so far in 2016. So here's what you really need to knowledge, the sort of knowledge that you need to navigate the precious metals successfully and profitably without making the mistakes that most other traders and investors they're making in the markets. Number one is gold and the volatility index and the correlation between these two, which is very strong. So gold, and otherwise known as the VIX, the volatility index, this is the correlation. So essentially what you see is most investors, they know that gold tends to rise when there's a sense of uncertainty in the global economy or markets are volatile. So at the start of 2016, we saw one of the worst performing weeks on record for equities and stocks. We saw a significant breakdown in the first week of the year, and with that, fear increased. We were in a risk-off environment. So where we had an increase of fear, which is measured by the VIX, gold also increased in price a lot. In fact, over the first quarter, gold increased over 16%, its best performance in 30 years. And a lot of this at the start, over the first 6 months of the year, gold rallied over 1,800 points to the upside. And a lot of that was off the back of a lot of fear in the market. We saw equities breaking down significantly at the start of the year. There was a lot of talk about equities entering a bear market. And with that, we saw a lot of investment demand. So for gold. So when fear spikes, investors, they flock into precious metals and they push the price higher. One of the best ways to measure fear is, again, the VIX, the volatility index. The VIX and gold, they have a tight correlation. So when you see the VIX jump up, so does gold as well. And it is one of the best indicators that will confirm when to buy gold, and also you'll be able to predict when the prices are about to fall as well to ensure that you achieve maximum profits on a trade. So right now, the volatility index is falling. It's breaking down today. We've seen more inflows back into the stock markets today. We've seen the S&P rally. We've seen the Dow Jones rally. And at the moment, gold's had quite a significant breakdown in price. It's probably one of the most significant breakdowns that we've seen, actually, corrections on gold throughout 2016 so far. We've got, I'll show you on the charts very shortly, but it's been a strong down day for gold. It's broken down about 250 points at the moment today. So with that, the VIX index, the fear index, has also broken down today as well. So you've got that strong correlation in place. And this is the overall VIX and gold correlation. When the VIX jumps, so does gold. You can see that very clearly on the chart there, that correlation between both of these markets. Okay, now I'll move it over to another point to look at is the gold to silver ratio. So the second point here, and one of the key reasons we look at that is we use the gold and silver ratio to determine what is the better play, whether it's gold or whether it's silver. If you see both markets moving up, it helps you to determine whether you should enter gold for a long or silver for a long. So, for example, at the beginning of the year, over the first 3 months of this year, gold was rallying. Gold was the leader out of the metals. silver was dragging its heels. Silver was dragging behind. It wasn't having such significant inflows as we saw on gold until April. So over the month of April, we started to see, in fact, March into April on gold, we started to see a consolidation on gold. Gold was struggling to get much higher. And then we saw in April, silver rocket. Silver moved 14% to the upside in just 1 month. So then the best play there was to come out of our gold positions and then enter buy positions on silver and then position ourselves more into a silver buy position as opposed to gold. And this again comes about via the gold to silver ratio. So if you track that, the gold to silver ratio, again, it's a great indicator that we use at the Gold and Silver Club to determine the right and wrong way and right time to buy or sell precious metals. Put simply, the gold to silver ratio is the amount of silver it takes to purchase 1 ounce of gold. So when the ratio is high, silver is favored over gold, and that's because relative to the ratio, silver is cheaper, offers greater upside potential, and on the flip side, a low ratio tends to favor gold, and it signals a good time to buy gold for a strong projected upside potential versus silver. So that's the way that we use the gold and silver ratio, and you will see this is just going back. So as we approach March and April this year, that the gold to silver ratio was favoring silver. So gold had already had its move. And then as we started to break down here in price on the gold to silver ratio, this then gave us a better opportunity, in fact, come out of our position on gold. And then we were looking to trade silver on that. And the third indicator, which is very useful when you are determining when to buy or sell gold and silver as well, is the US dollar index. So we've got an inverse correlation between gold and the US dollar index, and also silver and the US dollar index, because when you trade those markets, gold and silver, they're priced in US dollars. Now, we had a significant announcement last Wednesday. The minutes from the Federal Reserve, they surprised the markets last Wednesday, in that they have now put an interest rate hike back on the table as soon as the June FOMC statement, which is only about 3 weeks away now. So with that, so essentially an interest rate hike would be bullish for the US dollar and the American economy. And as such, we've continued to see since that announcement last week, the US dollar break out to the upside. US dollar has gained in strength. And with that, it's putting a lot of other markets off tilt right now, and they're selling off against the US dollar. Now there's anticipation for an interest rate hike in June. The June FOMC statement, we've continued to see dollar strength, and that is putting a lot of pressure at the moment on other commodities. We've seen gold has been the casualty today. It's broken down to 1,228 US dollars per ounce here. We've seen also breakdown on silver today, although silver hasn't broken down as much as gold. We'll take a look at that. Other commodities are also pulling back at the moment. And the way this gold to US dollar inverse correlation works is shown on the chart here. So you can see essentially in the grey when the US dollar index breaks down, which is what we've seen this year. We saw the US dollar index break down to 2-year lows on the expectation that the Federal Reserve was not going to go ahead with their pre-planned interest rate hike schedule at the beginning of the year, which was to go ahead with 4 interest rate hikes over the course of this year. They then reduced that to 2, but now they've put it back on the table again, where as imminently as June, they might be increasing the interest rate. So with that, we're seeing the US dollar rally and gold is selling off. Whereas at the beginning of the year, over the first quarter, the US dollar was breaking down significantly. And with that, we saw gold rallying. So that's the inverse correlation between those markets. And this is where essentially when the US dollar broke down to 2-year lows, that helped gold price surge towards $1,300 an ounce. And we saw silver breaking out to $18 an ounce. So we saw some very lucrative moves on that announcement. We saw some big breakdown in price from the US dollar, and that really spurred more buying into gold and silver. Okay, so with all of that said, I'll go over to the charts. Hopefully that's given you some tips, guys, just in terms of when you are analyzing gold and silver and you're working out when is a good opportunity to actually buy or sell into these markets. So remember, you can utilize those 3 indicators. You've got the VIX, which is the volatility index, which measures fear in the market. When fear increases in the market, that's when the stock markets are typically selling off. We're in a risk-off environment, and that causes essentially traders to then get into a safe haven like gold. Also, when the US dollar index, when that is breaking down, that is positive for gold. And when the US dollar index is rallying, that is certainly negative for gold as well. And the other point there is the gold to silver ratio, which when you're choosing between the two, which is more lucrative for you to buy or sell, looking at the gold and silver ratio will enable you to pick which market you should be buying or selling. Okay, so that would all help you with your gold and silver trading. Now, if we move over to the chart shortly, I'll just go through exactly the two types of trades we'll be looking at today. For those of you who join our commodities corner just throughout the weeks on Fridays at 12:30 London time, this will be a good little recap for you guys as well. But this is what we'll be having a look at now. We'll go through some trade opportunities on the markets right now using either the higher or lower type of trade. So essentially, if you select higher, you win the payout if the market exit price is strictly higher than the entry price. And if you select lower, you win the payout if the market exit price is strictly lower than the entry price. Okay, so two very straightforward ways to trade the markets. I will reach out to you if you've never traded on this platform before and if you're more experienced. So those of you who've never traded on this platform before, if you're an absolute beginner, right, this way of trading is very, very straightforward, because all you need to do is essentially you just need to predict the overall direction on the trade over a specified time frame, and the trade only needs to close 1 point in your direction. So if you pick, for example, gold for the price to be lower, the price only needs to close 1 point in your direction, so one tick in your direction over the time frame you specify, and you will win the entire payout. For those more seasoned traders who might be used to either trading on binary or you traded on other platforms, what this type of way of trading enables you to do, it enables you to get into markets which usually you would need a large stop loss on. So you might need to allow for a large degree of volatility, and by getting into a trade like this, it enables you not to need a stop loss. You don't need to put a take profit on the trade, and you don't need the trade to deliver hundreds of points for you to get a good risk to reward. All you need is the trade to close 1 point in your overall direction, and you win the entire payout. So a very straightforward way to trade the markets. Great for a beginner, but great to have in your toolbox as an advanced trader as well, which I'm sure a lot of you who trade on binary are aware of. Okay, so with that said, we'll move over to the charts, guys. I'll go over some of the trades which I'll first of all, we've just analyzed the markets, and I'll go over some of the charts which I'm looking at for trade opportunities at the moment. So wow, we've had a certainly significant breakdown in gold just this evening whilst I've been on the webinar as well. So let me just talk you through that, and we'll also we'll start off with gold here first, and then we'll build up a picture of we'll have a look at gold and silver, then we'll have a look at some of the other commodities as well. So bear with me as I just bring out my screens to share with you. Okay, just a quick check-in, guys, that you can hear me okay, and you can also see the presentation okay. You can see my chart at the moment on gold. Yeah, perfect. Thanks, Sharice. Okay, good. So we'll start off with gold. So you will immediately see on gold, it's essentially taken out major support today. We've been holding on to a major trend channel. We've had a pennant formation here on gold, and today it's broken through a major level of support, which is sitting at $1,240 per ounce. You can see that's actually a key Fibonacci level. We've got a significant underlying trend channel here as well, which is broken through. We've broken through and closed below a major moving average as well. And so far, we've not really seen buyers come back into gold at this point. It's continuing to break down, $1,228 at the moment. So short-term momentum is certainly favoring more downside right now. If we look at the overall point movement on gold today, we've broken down, let's have a look, 230 points. So your average day-to-day volatility on gold is in the region of 200 to 250 points. So I would suggest right now, gold is probably done for the day. In terms of the sell-off that we've got right now, it's getting towards the extreme end of its day-to-day volatility. But if we have a look at the overall price structure at the moment, I would look to you have a look around the 1200 level at the moment. The 1205 zone is really the next major level of support here. We're looking at potential bounces at 1230, which you can see has been sliced through already unless we close back above that level. But really the next major underlying support zone is here at the 1205 zone. So you've got quite a key moving average at that level. You've got a Fibonacci level at that level as well. And that's the previous swing low actually on the chart from the 15th of March, where we pull back to that zone before we got much higher again before we broke above 1,300 US dollars per ounce. So this is a healthy correction for gold at the moment. Gold really did need to have a healthy correction. That's what we've got right now. And what I will be looking at here is to see at what point buys come back into this market. Now, we've got a lot happening next week, which you want to have on your calendar, okay? So if you want to get or just take notes at this point, I'm sure you might be aware of this already, but next Thursday, we have the ECB announcement. So we have an interest rate decision out of Europe. And then we also have the OPEC meeting, which will definitely affect oil, okay? So we've got that next Thursday. And then next Friday is non-farm payroll. So those three announcements will have a big impact on commodities next Thursday and also Friday. Then just about a week and a half after that, we've got the FOMC statement, which is due on Wednesday, the 15th of June. And again, that is likely definitely to cause volatility in the market. So I would be having, I definitely pay a lot of attention to those major news announcements which are coming up. And that is what I would expect to be the catalyst for next big moves here on the precious metals. Now, if we move over and have a look at the US dollar index, you will note the US dollar index has now broken out. It's broken out of its trend channel. It's had a significant V-shaped reversal pattern. This is where it broke out of its neckline last week. It broke above that major level of resistance sitting at the 94.85 level. It's broken above that level, and it looks to be making its way up to the next major overhead resistance, which is at the 96 zone at the moment. So that will be about another 100-point breakout above. If it continues to rally like this, it will keep putting pressure on both gold and also silver. If we have a look at silver right now, the overall price structure, it's breaking down. It's broken below Fibonacci level today. It looks like we're going to close near enough, near the daily lows here. I would be looking at $16 per ounce as the next major level of support here for silver. So if we do continue to break down, it's about another 20 cents lower here. If we continue to break down to that level, that is the next buy zone that I'll be looking at here on silver, but only if it was to get a significant rejection at that level and if it was to bounce and produce some sort of setup at that zone. Otherwise, we've got a lot of clean air to break down to around the $15.82 per ounce here on silver. So short term, it looks like we're going to get more momentum to the downside. I will come back to that shortly because we might even have a trade opportunity on silver at the moment. Now moving over to oil. Now both light sweet crude oil and Brent crude oil, we've been stuck in a consolidation zone now for about 5 days. And we've got underlying support at 47.27 and overhead resistance at just shy of $50 per barrel here. I'm looking at a breakout trade in either direction. So if we were to get a breakout above resistance, above $50 per barrel, I'm looking for some follow through here on Brent crude oil. Okay, so we'll be looking for a breakout in the short term. Would take us up for about $1.50 move. Okay, so in the region of about 51.50 is what I would target. Now, if oil was to break down here from 47.30, we've got a fair amount of clean air as well to take oil back down towards the lower end of its trend channel. And that could also represent a good sell short opportunity. And then I will be looking for next week on Thursday, the OPEC announcement, the OPEC meeting, which is going ahead, will potentially be a big catalyst for the next move here. We'll definitely cover that with you all on next Friday's Commodities Corner, what happened on that actual OPEC announcement, but that also could be a major catalyst here for the next short-term direction for oil. So right now, there's not really too much to be done with oil. It's starting to roll over. Essentially, it's just forming a bit of a pennant formation. You've got lower highs, and you've also got higher lows on the chart. So it's just coiling up, getting tighter and tighter with price action on the chart right now, just awaiting a resolution and also a breakout. Now, if we move over to palladium, palladium has now taken out the lower end of its trend channel. You can see where palladium's continue to break down. You'll also want to be reminded that one of the major reasons for this, again, it's going back to the minutes last week. So again, goes back to fundamentals. The minutes which were released on the FOMC last week, the Federal Reserve, that has caused a big breakout in the US dollar index, a huge surge over the last few days. And with that, it's provided a lot of weakness to other markets. So that could be anything from palladium to coffee, which is broken down. We've seen that also on some of the grains today. Certainly, we've seen that also on gold, silver, palladium. And I'll just show you See if we can bring you over to the platinum chart. Yeah, platinum here as well has also broken down over the last few days here. So with a very strong US dollar, going back to the learnings and teachings from today, a very strong US dollar that we've seen over the last week has been a catalyst for a breakdown and a pullback and a correction with a lot of metals here. So that has really lent to certainly some short-term weakness in the markets. Okay, so that's what we're looking at the moment. What I would suggest, guys, for those of you who normally join us during our Commodities Corner, which is at 12:30 London time on Fridays, normally we'll be taking active trades during that session. There's some good trade opportunities to be had over that. For those of you who join us for that, you know that to be true. With the overall price structure tonight, as we're coming towards the close, I would say gold's overdone. It's not really got too much more downside left over the course of today. Silver at the moment, it's also getting to a little bit of a key support zone. I want to see how this closes over the next 2.5 hours or so. Platinum also, it's sitting right at a key level of support, and I want to see how this reacts into the close today. And also the same situation for palladium as well. Palladium's a bit overdone over today, so I'm not really looking to add any additional sell positions on those. And in terms of the energies right now, we're just coiling up. I would look at a breakout trade. We've got the oil inventories tomorrow, which is at 3:30 London time, and I would be looking out for the potential to trade that breakout tomorrow. Okay, that could be a catalyst for a move. Now, you absolutely do not want to miss some of the opportunities which will be occurring from next week. So Thursday's ECB announcement, Thursday's OPEC meeting, and also Friday's non-farm payroll, which I see as being very lucrative trade opportunities. They're just around the corner, just next week. And I get asked a lot, of course, how you can get access to our trade setups throughout the week, not just the trades that we're taking during these webinars. So, of course, there is an opportunity for you to gain access to all of the trades that we take at the Gold and Silver Club. Essentially, if you would like access to our exclusive live trading ideas, which we provide throughout the week, you can get access to that. So it might be that you're a new trader and you want to develop a solid understanding of the markets, fast track your results, especially if you've been trying to learn on your own, you haven't really managed to get a grasp of how to trade the markets, you're looking for education, you're looking for someone to show you and really hold your hand as to how to trade the commodity markets and show you step by step how to do that. So certainly the live trading room is the right place for you. And also if you're an experienced trader and you really want to take your trading just to the next level, you might be experienced in Forex, you might be experienced in equities, trading the stock markets, but you just want to learn how to trade commodities. You want access to these markets, you want exposure to these markets, you want to learn how to trade them the right way. If that's the case, well, I would definitely suggest take a look at the private members live trading room. Essentially, by being a member, you get access to our weekly live trading rooms throughout the week. You get live trade setups ready to implement, live trade notifications so you don't miss any profitable trades. You get exact details of where to enter, where to exit each trade, live trade support to help you successfully through each position, customized technical charts, indicators, which are all set up for you. So you've got all of the same charts that we use, all of the same indicators to increase your win rate, and of course exclusive access to our proprietary trading research to give you the ultimate edge when you are trading commodities. Okay, so if you would like to get exclusive access to our private members live trading room now, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we'll get in touch with you ASAP. So I just put a note there just so you've got the link, just to make it very straightforward, just so you can see that, www.jointhegoldandsilverclub.com. Once you've completed the application form, we'll essentially get in touch with you ASAP. And of course, if you've got any questions at all, if you'd like to get in touch with us, you can do just at your nearest office, either our UK office, our US office, our Africa office, or our Asia office. Our UK office is 0207 193 0403. Our US office is +1 646 808 0403. Our Africa office is +27 11 083 8403. And our Asia office is +852 8191 0403. Okay, fantastic. So with that, guys, I don't think there's any more questions at this point. So if there are any questions, of course, feel free to get in touch with us. And I thoroughly look forward to joining for those of you who will be joining us at the Gold and Silver Club. And yeah, have a fantastic week, guys. Good trading, and of course, look forward to working with those of you who will be joining us at the private members live trading room. Okay, thanks, guys. Take care. Thanks, Sharice. Thank you to Binary for hosting today's session. And of course, we'll see you guys very soon on the next one. Cheers, guys. Bye-bye.